Welcome to this video on the architecture of the global financial system. In this video, we'll explore the key components and institutions that make up the global financial system and how they interact with each other. Section 1. The basics of the global financial system. Let's start with the basics. The global financial system refers to the network of institutions, markets, and actors that facilitate the flow of capital and financial assets around the world. This system is essential to the functioning of the global economy as it allows individuals, companies, and governments to raise capital, invest in projects, and manage financial risks. At the core of the global financial system are the financial markets, which provide a platform for buying and selling financial assets such as stocks, bonds, currencies, and commodities. These markets are typically organized into exchanges, where buyers and sellers can trade these assets based on their perceived value. There are several types of financial markets that make up the global financial system. For example, the stock market is a type of financial market where companies can raise capital by selling shares of their ownership to investors. Investors can buy and sell these shares on stock exchanges, such as the New York Stock Exchange or the Nasdaq. Similarly, the bond market is another type of financial market where companies and governments can raise capital by issuing bonds, which are essentially debt securities. Investors can buy these bonds and receive regular interest payments, and can sell them on the bond market if they want to cash out before the bond matures. In addition to these traditional financial markets, there are also specialized markets such as the foreign exchange market, where currencies are traded, and the commodities market, where commodities such as gold, oil, and wheat are traded. Another important component of the global financial system is the banking sector. Commercial banks are responsible for providing credit and other financial services to individuals and businesses. They take in deposits from customers and use that money to make loans and investments. Banks also play a key role in facilitating international trade and investment by providing services such as letters of credit and foreign exchange transactions. Central banks are another important institution in the global financial system. They are responsible for managing the monetary policies of their respective countries. They use a range of tools, such as interest rates and quantitative easing, to regulate the money supply and stabilize their domestic economies. Central banks also act as lenders of last resort, providing emergency funding to banks and other financial institutions during times of financial crisis. In addition to these institutions and markets, there are also a number of international organizations that play a role in the global financial system. The International Monetary Fund is one such organization. It serves as a lender of last resort for countries facing financial crises and provides policy advice and technical assistance to its member countries. The World Bank is another organization that provides financial and technical assistance to developing countries. The global financial system is also closely tied to the process of globalization. As the world becomes increasingly interconnected, with greater flows of trade, capital, and people across national borders, the global financial system has become more complex and multifaceted. While globalization has expanded the range of investment opportunities available to investors and has enabled countries to tap into global pools of capital, it has also increased the risk of financial contagion, as financial crises in one part of the world can quickly spread to other regions. Section 2. Key players in the global financial system. Now let's take a look at some of the key players in the global financial system. The global financial system involves a wide range of institutions, markets, and actors, all of which play an important role in the functioning of the global economy. Here are some key players in the global financial system. 1. Central banks. Central banks are responsible for managing the monetary policies of their respective countries. They use a range of tools, such as interest rates and quantitative easing, to regulate the money supply and stabilize their domestic economies. Central banks also play a key role in managing the exchange rates between different currencies and can intervene in currency markets to maintain stability. 2. International Monetary Fund. The IMF is a global organization that serves as a lender of last resort for countries facing financial crises. It provides loans to member countries to help them stabilize their economies, and also provides policy advice and technical assistance. 3. Commercial banks. Commercial banks provide credit and other financial services to individuals and businesses. They operate in both domestic and international markets, and play a critical role in the global economy by facilitating the flow of capital and providing liquidity to financial markets. 4. Investment banks. Investment banks help companies and governments raise capital by underwriting and selling securities such as stocks and bonds. They also provide a range of advisory services, such as mergers and acquisitions, and assist with debt and equity offerings. 5. Hedge funds. Hedge funds are private investment funds that are typically only available to wealthy investors. They use a range of investment strategies to generate high returns and can invest in a wide range of financial instruments such as stocks, bonds, and derivatives. 6. Private equity firms. Private equity firms invest in private companies and seek to maximize their returns by improving their operations and selling them for a profit. They typically acquire a controlling stake in the companies they invest in and have a greater degree of control over their operations than traditional investors. 7. Rating agencies. Rating agencies provide credit ratings for companies, governments, and financial instruments such as bonds. These ratings are used by investors to assess the creditworthiness of potential investments and can have a significant impact on the cost of borrowing. 8. Stock exchanges. Stock exchanges provide a platform for companies to list their shares and for investors to buy and sell these shares. They play a critical role in facilitating the flow of capital and providing liquidity to financial markets. 9. Clearinghouses. Clearinghouses act as intermediaries between buyers and sellers in financial markets, helping to manage the risk associated with trading. They facilitate the settlement of transactions and provide a range of services such as margining and collateral management. Understanding the roles and interactions of these key players is essential for anyone seeking to navigate the complex world of finance and investments. Section 3. The global financial system and globalization. Finally, let's consider the relationship between the global financial system and the process of globalization. Globalization has had a significant impact on the global financial system, transforming it into a complex network of interconnected financial institutions, markets, and actors. One of the main effects of globalization on the global financial system has been the expansion of cross-border flows of capital, which has led to increased financial integration among countries. This integration has created both opportunities and challenges for the global financial system. On the one hand, it has expanded the range of investment opportunities available to investors and has enabled countries to tap into global pools of capital. This has facilitated the financing of large-scale projects such as infrastructure development and has helped drive economic growth in many parts of the world. On the other hand, increased financial integration has also increased the risk of financial contagion. Financial crises in one part of the world can quickly spread to other regions through financial channels, leading to economic downturns and financial instability in multiple countries. To manage these risks, a number of international institutions and agreements have been established to promote financial stability and cooperation among countries. The International Monetary Fund, for example, provides policy advice and technical assistance to its member countries and serves as a lender of last resort during financial crises. Other institutions, such as the Financial Stability Board, have been established to coordinate international efforts to strengthen financial regulation and oversight. The FSB brings together regulators and supervisors from around the world to develop and implement global financial standards and best practices. In conclusion, the architecture of the global financial system is complex and multifaceted, involving a wide range of institutions, markets, and actors. It plays a critical role in the functioning of the global economy and has been shaped by the forces of globalization. Understanding how the global financial system works is essential for anyone who wants to navigate the world of finance and investments. Thank you for watching this video, and we hope you found it informative.